Welcome to the deep dive. Today, we're really digging into Lowe's, specifically their latest quarterly results, Q1 for 2025.
Right. We've got the earnings call transcript, which is always packed with detail.
Yep. And a news summary, plus some of Lowe's own releases, like an infographic they put out.
So the plan is to pull out the key numbers, figure out the trends underneath, what's really going on in home improvement right now.
Exactly. What do you actually need to know to be well informed on this? Let's jump in.
Okay, so headline numbers first.
Yeah, let's start there. Overall financial performance. Q1 sales landed at $20.9 billion.
Which is down a bit from last year, right? Q1 2024 was $21.4 billion.
Correct. And comparable sales, that's a key metric. They were down 1.7%.
But interestingly, Lowe has actually said that dip was pretty much in line with what they were expecting.
Yeah, which is important context. It suggests they saw this coming, given the market.
And on the bottom line, net earnings were $1.6 billion. That translates to diluted earnings per share, EPS, of $2.92.
Also down a bit from last year's $3.06 per share.
But here's a little twist. While the total sales, that $20.93 billion, just slightly missed what analysts were forecasting.
They were looking for $20.96 billion.
Yeah, just shy. But the earnings per share, the $2.92, actually beat the consensus estimate of $2.88.
So revenue slightly below expectations, but profitability per share slightly above. Bit of a mixed bag there.
It really is. It suggests maybe some good cost control or perhaps, other factors helping that per share number even with softer sales. Makes you want to look closer at the why.
Okay, so let's do that. What factors were shaping this quarter? Weather seems like a big one.
Oh, definitely. They called out unfavorable weather, especially early in the quarter. February was apparently quite rough for spring-related sales.
How rough?
Comparable sales were down 5.4% just in February. That's pretty significant.
Wow, yeah. You can see how that would happen. Bad weather, people put off gardening, outdoor projects, that kind of stuff.
Exactly. But then things sort of normalized a bit in March as the weather got better. Comps actually went up 1.7% that month.
Okay, a rebound. But then April dipped again, down 2.6%.
Yeah, and they said part of that April dip was because Easter landed earlier this year. That can mess with the year-over-year comparison sometimes.
Right, those calendar shifts. Always something to keep in mind. Okay, beyond weather, what about customer types? DIY versus pro.
That split continues to be really important. They noted ongoing pressure on the DIY side, especially for bigger, more discretionary projects. People seem hesitant.
Still pulling back on those larger, non-essential upgrades.
It seems like it. But the pro customer segment, that showed mid-single-digit growth. That's quite positive.
Okay, so the professionals, the contractors, they're still spending. That's a key strength.
Absolutely. It suggests those more essential or contracted projects are holding up better. We're seeing that pattern elsewhere, too.
And online, how did that perform?
That was another bright spot, actually. Online sales grew by 6%.
Oh, interesting. So even with overall sales slightly down, the online channel is growing.
Yeah, driven by more traffic to their site and app, and better conversion rates, meaning more of those visitors actually bought something.
So their digital efforts seem to be paying off. Good sign.
Definitely highlights how crucial that omni-channel experience is, blending online and physical stores seamlessly. Okay, should we talk strategy? Initiatives?
Yeah, let's pivot to that. What's Lowe's focusing on? Customer satisfaction seems high on the list. They mentioned getting ranked #1 by J.D. Power this year.
That's a big deal. J.D. Power awards carry weight. They attributed it to investments in tech, the store environment, and crucially knowledgeable staff.
Makes sense. And their loyalty program, My Lowe's Rewards.
Huge numbers there. Over 30 million members already. And get this, those members spend almost 50% more than non-members.
Wow. That shows the power of loyalty programs when they work. Are they doing specific things for members?
Yeah, they mentioned their Springfest event and this Mulch Madness deal, 5 bags for $10, plus bonus points and a free gift, trying to drive engagement.
Targeted promos. Smart. Okay, what about tech and innovation?
Well, this is pretty cool. They launched something called Milo. It's an AI-powered virtual advisor for home improvement.
AI, developed with OpenAI, right?
Exactly. It's supposed to give project instructions, recommend products, could be really helpful, especially for DIY folks who aren't sure where to start.
Integrating AI like that feels very current.
And it's not just customer-facing AI. Their mobile app won a Webby Award for Best Retail App.
Good recognition. And they have an app for their associates, too.
Yeah, the Milo's Companion app gives store staff quick access to product info, project details, helps them help customers better.
Empowering the staff on the floor. Makes sense.
Yeah.
Okay, let's circle back to the pro segment growth. Mid-single digits, you said.
Yep. And they've actively been working on that. They relaunched their Pro loyalty program nationwide. It's now called Milo's Pro Rewards.
What's different about it?
They're emphasizing ease of use. Pros can just use their phone number at checkout. And they added Spanish language enrollment too, making it more accessible.
Smart. Reducing friction for those key customers.
But the really big news on the Pro front is the acquisition they announced in April. Artisan Design Group, ADG.
Right, ADG. Tell us about them. What do they do?
They're a major player in designing, distributing, and installing interior finishes. Think flooring, countertops, cabinets, stuff like that.
And who are their main customers?
Primarily home builders and property managers. It's a huge market they operate in, apparently around $50 billion.
So Lowe's buying ADG is a direct play to get a bigger slice of that pro spending, especially with builders.
Exactly. They specifically mentioned the new construction market potential. Estimates suggest the U.S. needs something like 18 million new homes by 2033. This positions Lowe's to capture more of that builder spend.
And ADG has a good reputation.
Apparently so. Lowe's highlighted ADG's strong customer satisfaction scores with top builders. So it looks like a strategic move into a big growth area for pros.
Okay, let's shift back to online again. That 6% growth.
Yeah.
How are they driving that beyond the main website?
A key part is their online marketplace, which they launched last year.
Right, letting third parties sell through Lowe's website.
Yeah. And to scale that up faster, they've partnered with a company called Miracle. They're a leader in marketplace tech.
So Miracle helps them add more sellers and products easily.
That's the idea. Expand the online selection, add new categories, but without Lowe's having to hold all the inventory or build new fulfillment centers themselves. It's a more efficient way to grow their digital shelf space.
Makes sense. Did they mention where they're sourcing products from generally?
They did give some figures. About 60% of what they buy originates here in the U.S.
Okay, majority domestic.
And around 20% currently comes from China. They specifically said they're actively working to diversify their global sourcing.
Probably wise, given potential tariffs and supply chain risks.
You'd think so. They also talked about internal efforts, these perpetual productivity improvement initiatives, or PPI.
PPI. Catchy name. What does that involve?
It's about operational efficiency, basically. Things like improving supply chains, managing inventory better, reducing shrink.
Shrink being theft and damage.
Exactly. And also getting more revenue from their credit card programs. These PPI efforts are apparently helping their gross profit margin. It was up 19 basis points.
So up 0.19% to 33.4%. Small percentage, but on billions in sales, that adds up.
Absolutely. They're also looking at optimizing their store layouts, what they call space productivity.
Focusing on specific categories.
Yeah, things like tailoring assortments for rural stores, adding more workwear, expanding pet supplies, making sure the space reflects local customer needs.
Getting the right products in the right places. Logical. Did they touch on community stuff?
Briefly, yeah. They have this Here to Help initiative. Goal is 10 million square feet of positive community impact this year. Safe housing, disaster relief, that kind of thing.
And that's tied into their bigger $100 million hometowns commitment over 5 years.
Seems to be part of it. Good corporate citizenship angle. Kept product categories. Appliances sounded like a strong area.
Yes, they reported growth across all the major appliance types. Fridges, laundry, cooking, dishwashers.
What's driving that?
They pointed to having a wide selection, their delivery network, apparently next-day delivery to most of the U.S.,
That's impressive.
and having knowledgeable staff in the stores to help with those complex purchases. They even mentioned a specific high-tech product, the Samsung Bespoke AI laundry machine.
Sounds fancy. All in one.
Yep. They also mentioned extended aisle. What's that about?
Yeah. That lets them show and sell products directly from their suppliers, even if Lowe's doesn't physically stock them in the warehouse or store.
Sort of like an endless aisle online, but maybe integrated differently.
Kind of. It sounds particularly useful for pros who might need specialized items. It helps streamline getting quotes and ordering a wider range of materials.
Makes sense for the pro focus. Okay, so looking ahead, what's their forecast for the rest of 2025? Do they change their guidance?
No, and that's significant. They affirmed their previous full-year guidance.
Okay, so they're sticking with total sales between $83.5 billion and $84.5 billion for the year.
Correct. And comparable sales somewhere between flat and up 1%.
Operating margin between 12.3% and 12.4%.
And earnings per share around $12.15 to $12.40, plus about $2.5 billion in capital spending planned.
So sticking to the plan despite the slightly rocky Q1 start, that suggests some confidence.
It does, and they gave a little color on Q2 specifically.
Oh, what are they expecting for the current quarter?
They think Q2 comparable sales will be about 1.5% better than the low end of their full-year guide.
Okay, bit of a bounce back expected.
An operating margin rate about 400% higher than last year's adjusted rate. They figure about $400 million in spring demand got pushed from Q1 into Q2 because of that bad weather early on.
Ah, so that delayed spring spending should help Q2 numbers.
hmm
Makes sense. One last thing, tariffs. Any word on how they're handling potential cost increases?
They said they're taking a portfolio approach to pricing, using their pricing tools, working with suppliers, basically trying to stay competitive.
So no clear answer on whether prices will definitely go up.
Not explicitly. They emphasize being competitive on price. They expect any new tariff impacts might hit more in the second half of the year, but they believe they can manage and offset most of it.
Trying to absorb it rather than pass it all on, if possible.
Seems to be the goal. Okay, so summing up this deep dive.
Yeah, let's recap. Lowe's had, a bit of a tough start to the year, Q1. Weather was a big factor, plus that ongoing softness in big DIY projects.
But definite bright spots in the pro customer segment and their online sales growth.
Right, and they seem to be making real progress on their strategic goals, customer satisfaction, building up that loyalty program, using tech like AI.
And that ADG acquisition. That's a clear signal about doubling down on the pro market.
For sure. It really feels like a strategic push there.
Which, combined with the online marketplace focus, points to this multi-pronged strategy to serve both DIY and pro customers wherever and however they want to shop.
So here's something to chew on as we wrap up. When you look at everything, the housing market uncertainty, Lowe's strategic bets, especially on pro and digital, what does this all mean for the home improvement landscape long term?
Yeah, how is consumer behavior going to keep shifting? Does this heavy lean into pro and online marketplaces signal a fundamental change in how we all tackle home projects in the future?
Definitely some interesting questions to ponder. A sector clearly in transition. Thanks for joining us for this deep dive.